Stablecoins, the not-so-cheeky name for one of the most disruptive forces in modern finance. Whether you've heard about them in crypto Reddit threads or just spotted the word scrolling past your newsfeed, stablecoins are quietly reshaping how we move money without the drama of market swings. And with bipartisan congressional attention on stablecoins, impending legislation known as the Genius Act could encourage the U.S. stablecoin market to grow eightfold over the next 10 years. Today, I'm joined by Portfolio Manager Clayton Allison and Deputy Chief Investment Officer Will McGuff to dissect what stablecoins really are, how they're being used by everyday people, and why companies like Visa, Mastercard, and Coinbase are watching them like hawks. Is it innovation, inflation protection, or just another digital distraction? Let's find out. And hey, if this conversation makes you wonder whether your portfolio is ready for what's next, we've got you. Reach out for a free, no obligation second opinion, because confidence in your financial decisions shouldn't be as volatile as crypto. Let's kick things off with you, Will. Give us the 30,000-foot view on digital currency like crypto, blockchain, and stablecoin.
Yeah, thanks, Tara, and everybody for joining in. Very buzzwordy session we're having today. Crypto is all the rage. And essentially, think of crypto as digital money. And that digital money lives on a thing called the blockchain, which is a public tamper-proof ledger that records every transaction. It's very transparent. You can go look at the blockchain ledger right now and see any transition. It won't make much sense to you because it's a bunch of numbers. The other big word you hear about these days is DeFi. It's called decentralized finance. So it's an entirely new financial system on top of this blockchain technology. So lending, borrowing, saving, traditional banking can happen all outside of the traditional finance ecosystem. To transact on the blockchain, you need an exchange like Coinbase or Binance. They're called crypto exchanges. So they're the ways that you get in or out of crypto assets. I like to think of crypto as the early days of the internet back in the 90s. There's a ton of innovation and momentum, but we're still in the early innings. Lastly, right now there's a bill called the Genius Act that's running through Congress, and it's aimed at establishing a regulatory framework for stablecoins, which is a type of crypto that's going to hold value, hence stables in its name, and it's typically pegged to something. But with that, I'm getting a little long-winded, so I'll get it back over to you, Tara.
Thanks, Will. No, that's great. I think helping us understand what sort of the language around this space is really helpful for everybody to level set. So Clayton, take us a level deeper and help us understand what stablecoin specifically is.
Yeah, thanks, Tara. And first things first, everybody, that was probably the best, most simplistic 30,000-foot view on the crypto landscape I've heard in a minute. And if you're still confused, I don't blame you. That's just kind of how chaotic and new this technology is. So we're going to try to keep it super simplistic going forward so we can all, even the three of us, can understand it just a little bit better. Now, Terry, your question about what is actually a stablecoin. So like Will was saying, a stablecoin is still just a cryptocurrency, much like Bitcoin or Ethereum that a lot of you have probably heard or seen in the headlines. But the key difference with stablecoins is that they are pegged at a fixed value. Traditionally, these are going to be backed by things like U.S. Treasuries or the dollar. Now, some other stablecoins, now there's not one uniform one, like similar other cryptocurrencies. People can kind of create their own, like we're going to talk about in a little bit later, and they can peg them to different things. Some people peg them to algorithms or other cryptocurrencies. Those make it a little bit more risky and more volatile. But for the context of our conversation today, stablecoins, largely just a cryptocurrency pegged to a fixed value, in this case, probably the dollar or a U.S. Treasury.
That's really helpful for us to get that additional context. And you're right, it's hard to understand this stuff. So I think that just having that common language is really helpful. So coming back to you, Will, how can everyday people, what I like to call Jane and Joe investor, use stablecoins in their investment strategy?
Right. So in essence, think of stablecoins as a fully transparent gift card on the blockchain. So in the future, where we'll see people using stablecoins is, money transfers. Instead of going through Venmo or PayPal or Zelling with your bank, you would open an app and be able to send stablecoins amongst each other. Stablecoins can also be potentially issued by the likes of Target or Walmart, where you could transact on their websites in their stablecoin. And why would you do that? Well, they're going to essentially rip out some of the fees from the other transaction networks and try to share in those economics with the consumer. So those yields or rewards could be enticing because ultimately, as the consumer, they want you to consume all of their products or stuff that they're selling. And lastly, we could see an evolution of various savings mechanisms through stable coins. So instead of going to a money market fund, you may have a stable coin that is essentially giving you yield, like backed by a US Treasury. So again, when I'll end with what I started, just think of them as very fancy digital gift cards.
That is a great way for me to understand how this works. And I think that when we start to think about the transactions that maybe some of us have already had, it becomes clear in your description, Will, that we've probably already experienced stablecoin in some way, shape, or form in some of the transactions that we've had in different with different companies. So Clayton, Will touched on this, and I also saw that some major companies like Amazon and Walmart have explored using their own stable coins in the US, potentially siphoning a significant amount of payment volume away from traditional payment providers. How does all of this affect stocks like Visa, Mastercard, and Coinbase on one hand, and then on the other hand, Amazon, Walmart, and the like?
Yeah, I think that's a great point, and obviously both of you kind of already touched on a lot of the impacts of this just a little bit briefly. So like you mentioned, Tara, it was Amazon, Walmart came out a couple weeks ago saying that they were going to explore the idea of creating their own stable coins. Now when that happened, Visa, Mastercard, the two credit card giants, fell close to 5% in a single day, and I think close to 10% in roughly 2 to 3 trading days. Now, to the point of that and why they fell so hard is a lot of what Will said. They're trying to kind of siphon off the kind of credit card fees that Amazon and Walmart are having to pay. Now, Visa, MasterCard, they collect billions upon billions of dollars every single year for their card transaction fees on their network. So by establishing their own stable coins, Walmart, Amazon, those retailers can save a lot of that money, go back to their margins and become more profitable, and really kind of cut those costs off completely and bypass the card networks. Now, I think maybe that reaction of the day was maybe a little overdone. Now, the work needed to establish your own stable coin with the regulation and infrastructure that it would take years, not just like a couple weeks. They're not just going to spin this out overnight or anything like that. And on top of it, you both kind of alluded to this fact. Tara, you mentioned it also, like, hey, some of our transactions that we've done in the past kind of gives stablecoin-like transactions. Well, in this case, and what Will said, if Walmart or Amazon establishes their own stablecoin, well, that's great. They keep customers on their network, but at that point, that stablecoin is only good on their own retail platform. I can't then go take a Walmart stablecoin and go shop at Target, but I can do that with my Visa credit card. I can shop wherever I want. So at that point, you kind of lose universal acceptance, like those credit cards get, to pretty much lock in your customers on your retail platform and save some costs. Now, obviously, there will be friction there between all these various companies and whether or not this actually comes to fruition. But Visa and MasterCard fell because that's a very tangible threat to their business model. Now, they're some of the best companies on the planet. They're already being proactive and working with others to establish their potentially own stablecoin and integrating those into their card networks. Now, your question about Coinbase. Well, Coinbase probably stands to benefit the most from the adoption of stablecoins because they, along with Circle, have launched the largest regulated stablecoin right now out there in the market called USDC. Pretty much that's a stablecoin pegged to the US dollar already. And on top of that, they're really becoming the industry's main source of crypto infrastructure. So as the continued crypto space continues to grow, Coinbase is going to be kind of centrally integrated into that piece right there. But this is going to be a multi-year process to really get adoption, past regulations, and the infrastructure needed for consumers to be using stablecoins at large.
There's a lot to pay attention to over the long term. It's really great. As always, we always say talk to a professional. If you're curious about how any of this fits into your long-term investment strategy, and whether you're crypto curious or just want to keep up with the payment tech evolution, one thing's clear: stablecoins are locking in for the long haul. The implications for traditional finance and your investments are just beginning to unfold. So big thanks to you, Clayton and Will, for helping us cut through the blockchain buzzwords and to bring some real-world clarity to the conversation, as always. If you're wondering how stablecoins or any part of this fast-changing landscape might affect your portfolio, don't guess. Connect with our team for a complimentary second opinion. No pressure, no hype, just honest insight to help you move forward with confidence. Scan the QR code on your screen or click the link in the show description. Thanks for tuning in, and remember, stay informed, stay invested, and as always, we'll be here to help you navigate the twists and turns of the market. Until next time.